I guess I should. All right, here we are. We
Here we
tried to
are.
go live. It did not work, but we're doing Zoom instead. So
Yep.
I'm here with Martin Witchlatch.
Yep.
Saying it right?
Yeah.
All
kind
right.
of kind of hard to pronounce, but yeah, it's good. Martin W's good.
Yeah, Martin Dub. Well, thank you. I appreciate you taking a few minutes today. Just a little background. We connected or know each other from the music industry from a few years back.
Oh, yeah.
And have had each other on Facebook ever since. And we both kind of moved into similar industries. So it's good to connect with you again. Why don't you just let us know a little bit about yourself to start?
Absolutely. So I've been in finance for about, I'd say about maybe 13 years now. Majority of it being automotive finance. I worked in the dealership world. I started in the mortgage industry about 5 years ago. I'm now I have a broker license now, and I work for Adamus Financial. And basically, you could find me on any social media. Outsmart the banks, one word. And yeah, just I'm there. If you need
Awesome.
content,
Yeah. Yeah. So, well, speaking of the name, I like that.
yeah,
Where did
yeah.
that come from?
I'm not a big fan of the big guy kind of thing. So Outsmart the Banks was kind of my little prod at, all right, maybe Canadians, a lot of Canadians that come to the broker side maybe aren't big fans of like the big five banks. And on the broker channel, we actually have really good products that are able to service people. I know people that have come from the banks and then have talked to me and they're like, wow, this is you were so much more helpful than the guy at the branch, or I was just a number to them, but I'm getting treated so much differently with you. So it was it and yeah, it kind of just stuck. Like I'm like, outsmart, outsmart the bank. No, forget it. Outsmart them all, outsmart the banks.
Yeah.
Right. So
Yeah.
so
Yeah.
that's kind of how that came along. Yeah.
Awesome. And so you do quite a bit of content as well, right? Are you not an award-winning content creator?
Yeah. So last year, actually, I hooked up with my buddy Dan and from Capture Connections, and he actually got me into doing TikToks. So I did a lot of TikToks last year, and a lot of people got to know me through that, and my network actually grew quite a bit because of the TikToks. However, I switched brokerages, so I had to delete them all, unfortunately.
Ah,
There was quite a I had quite a lot of views on them, but because I can't advertise a different brokerage or a brokerage that I'm not working at, I had to kind of unfortunately delete that. But this year I'm gonna have to ramp that back up again.
yeah,
So
yeah.
yeah,
Yeah, no, it
yeah,
was I appreciate the content. You definitely like, you know, put a lot of work into it and made it interesting. And that's I think important. Some of the stuff can be a little dry, so to make it interesting for people,
yeah.
and like you said, you were getting views. I'm sure you must have got leads, and we're able to do more than just generate awareness, but like connect with people through social media. So that's amazing.
hmm Yeah, you got to make it entertaining. Honestly, this finance is very dry, and people just kind of skim through it. But if you make it entertaining, then maybe you can capture their attention for that, 15, 30 seconds and actually maybe even educate them with something, or
Right. Yeah.
it's more memorable, right?
Yeah.
Too, as well.
Provide value, but some entertainment as well.
Yeah, absolutely.
And speaking of which, are you doing any music of any sorts anymore? Or?
No, not anymore. Like my friends still are. My
Yeah,
son actually started doing music. He's 17 years old. He's producing, engineering,
awesome.
working at a studio. So, and it's kind of funny how that came together because I never told him about kind of what I used to do with H Block Entertainment. I used to do events and stuff like that. And I'm just like, oh yeah, by the way, do you know that I used to do this? And then he goes out to the studio And then the people that he meets, they're like, "Oh, I know your father." Just like, how does everybody know you? It's like, you know.
Yeah, yeah, that's cool. My daughter's
Yeah.
14 months, so she has a keyboard.
Yeah. Okay. Nice.
She
Nice.
seems to really enjoy, she does her little dance every time music comes on. She's playing her keyboard, so we'll see if that
Perfect.
goes anywhere. But
Yeah.
all right, so let's
Starting
talk a
with.
little bit more about mortgage rates and kind of what's going on. We recently had a rate announcement March 8th. They held the rate, which I don't know if that was a surprise to you or for
Oh.
what you were expecting.
No, well, it wasn't a surprise. Usually, after a rate announcement, the economists will go on and be like, well, next time they're going to hold the rate and this and that, and that's what ended up happening.
Right.
They actually called it, so it wasn't a surprise. It's a relief, definitely, especially for people that have variable rates and haven't made the switch yet. But yeah, they raised rates so quickly. They needed to kind of give it time for it to actually have an effect, to
Right.
actually analyze what's going to happen before they keep raising rates too fast.
Mhm.
And a lot of people are kind of adjusting. I had a lot of clients go from variable and then get locked into a prime rate. Um, most of the people have done that. A lot of people have done that actually. um, and yeah, and then there's another announcement coming up from the States, I guess on the 21st.
Yeah.
And yeah, it's after this weekend, there's been a lot of even more uncertainty with those couple banks there
Yeah.
not being able to make payroll. So there might be another bailout there, printing more money there
Mhm.
to bail
Well,
them
and
out,
that's
you
the
know.
thing is we've paused there's all like I've noticed on this side there's a almost an uptick in buyer confidence just from that, right?
Absolutely.
But we traditionally would follow the US, and their inflation is still running fairly hot, and
Mhm.
we're probably looking at more interest rate increases there. So moving forward, because I've seen economists recently say, predictions saying, that we're going to probably hold this rate relatively for the rest of the year. But that seems like, are we really? Because if we're going to have to kind of follow the US like we do, they're likely to go up. What are your thoughts on that?
It's definitely a gamble. In I've gone to a lot of conventions recently and talked to other mortgage brokers and people that have been in the industry longer than me, like 20 years, 25 years. And then I talked to some newer guys that have been in the industry 5, 10 years, whatever. Um, and a lot of people a lot of them are banking that like in the next 2, 3 years, interest rates will drop. A lot of the old heads are basically saying that interest rates are probably not going to drop in the next 5, 10 years, right? So it is definitely unprecedented times, and nobody actually, if somebody says, "Oh, I know this is actually going to happen in the next year or 5 years or 10 years," they don't know for sure. And I wouldn't hold too much water to what they say. It is going to be, with so much going on in the world, it is very unpredictable as to what your bet is going to be.
Mhm.
And then I have some clients that are like, well, I want a 3 year fixed term, or because I know rates are going down. But then I have other clients that are like, hey, I want a 10 year fixed rate, right? So
Because I know rates are going up.
well,
Yeah.
the people that want the 10 year have been
Right.
around in the 70s and 80s.
Yeah.
And the people that want the 3 year are, fresh in the game and haven't,
Mhm.
seen rates that are higher than 10%, right? So
Sure.
um, it's definitely uncertain. I don't think you should be making bets. I think that you should do what you're comfortable with. If you're going to be comfortable with a 5 year fix at a good rate, do that. It's better to it's better to um, kind of lock in something that you're comfortable with, rather than like worst thing that could happen if you lock in a 5-year rate. Rates go down, but you're still comfortable making your payments.
Mhm.
Now, if you go into a variable situation, let's say rates go up, what are you going to do? Are you going to pay that penalty, 3-month penalty to go into a fixed rate because you had that chance? And then if you are, you're getting into a fixed rate that's available at that time, maybe not the fixed rate that's available now, right? So
Right. Yeah,
it's,
exactly.
it's a
Very true.
gamble, right? And everybody's different. It all depends on your situation. If you have extra cash flow at the end of the month after paying your bills and your mortgage, you have a little bit of room to gamble with. But if you're somebody that's living check to check and you're hedging your bets on rates going down in 3 years, maybe that isn't a wise thing to do, right?
Right. You touched on something there that there's a delayed effect, right? We haven't seen that. We haven't. We're just starting to maybe see from the first rate hikes, right? Like we're not seeing the effects of the rate hikes from January. We won't see that for quite some time. So I think you're right to find a place where you're comfortable, you can afford. Affordability is the key. Whether or not you're going to miss out on a slight rate adjustment one way or the other shouldn't be. And I always tell people, it's a long term. You should be thinking long term in real estate in general. So if if you're going to you can't have FOMO about missing out on a 0.5% or 1% lower in rates. So yeah, I think that's great advice. And I like that you kind of you avoided any predictions whatsoever.
It's I hope for the best, prepare for the worst kind of thing. I would love to see rates go down, and if we do see rates go down, I don't think we're going to see that happen for another like 2-3 years, to be honest.
Yeah.
But at the same time, you got to kind of like hope for the best, prepare for the worst kind of situation. And with there's other factors to this, right? You have food costs going up. The prediction is next year food cost is going to be 20% higher, 19% higher than they are today.
Yeah, which is crazy to think because they're
Yeah.
already so high.
Yeah.
Yeah, that's yeah, it's hard to it's hard to fathom that.
Yeah.
But yeah, no, I think that's smart. I think that's great advice for clients, for people getting in, and because it's hard to know, right? It's hard for people to know. And especially I think there's a bit of a disconnect between, they just hear interest rate announcements, they think rates are going up, and maybe can you talk a little bit about, fixed versus variable rates and what affects each of those?
Yeah, actually, so a lot of Canadians, there's a huge misconception, obviously. So variable rates is based on the Bank of Canada announcing their rates. So right now, rates are so the last rate hike, it basically stayed the same. So that only affects people with variable rates. So the prime rate right now for Bank of Canada is 6.7%. So you could have a variable rate that's, between 0.4% under that or 0.9% under that. So like a common variable rate, if you have like 0.9% lower, you're going to be looking at 5.8%. Fixed rates aren't tied into the Bank of Canada announcement. They're actually tied into the bond market and 5-year bond yield. And right now, you can get a fixed rate between 4.79 and 5.19%, essentially, which is lower than the variable rate. And this hasn't happened in quite a long time. Usually the best bet is to go variable. But yeah, the Bank of Canada has nothing to do with fixed. They do, but their announcements have nothing to do with the fixed rates, and
Right.
and that's the biggest misconception that most people have. typically?
It's huge. I run into it all the time. Like I said,
Mm.
people just blanket rates have gone up. I'm waiting, and then you have the people who are waiting for the rates to come down, but also waiting for the prices to come down. And so I'm often like,
Yeah.
those two things aren't really going to happen together. Um,
No, no. The
but
market is heating. It's gonna heat up definitely this spring because, like you said, the rates held. People are a little bit more confident. They maybe weren't able to purchase the last time around, last fall, spring market. So they're kind of still, they've saved a little bit more money. They've paid off some more debts, fixed their credit a bit more. I've been working with quite a lot of people that have pre-approvals, and they're just looking for that house, right? The main problem is, supply. It's always supply. A lot of people don't want to move because they're uncertain. But I have a feeling that a lot of houses are going to come on the market. Some of them might actually be like powers of sales and stuff because some people bid off a little bit more than they can chew. So that was kind of the word in the industry, was that there are a lot of lenders that are holding off their powers of sales till the spring market.
okay.
People that were irresponsible or had bad advice or lost their job or whatever the case was.
Yeah.
But there should be a lot more inventory coming on the market, I think, this spring, hopefully.
Yeah, hopefully. I mean, that's been our, probably the biggest factor here, right? Is just the lack of supply in
Yeah.
general. And so, yeah, let's hope that comes in. And I know that you were kind of like, yes, for, that they held the rates and stuff. And
Yeah.
for a lot of people, they're probably like, that comes as good news. But you also mentioned there's other factors, right? And so if they, we're not at our 2% inflation target yet,
Mm-hmm.
right?
Yeah.
So the thing is, it feels good. It's great news to not see more increases, but at the same time, if we don't have those increases to fight the inflation, we're we risk seeing more inflation, right? And
Yeah.
hyperinflation.
Yeah.
So
Yeah.
I get there's that balance. So it's tough too, because you have to take in the overall economy to into consideration when talking about these things, and keeping your fingers crossed for certain things.
Even world events, right? So
Yeah.
that could have a major factor, right? Avian flu, chicken prices go up, mad cow disease, beef prices go up, like there could be there's so many external factors that play into Canadians' everyday budget.
Mhm.
And if people are being very short-sighted and just using their credit cards, then they could be. It was interesting. I did the Equifax advanced Equifax course, and they basically said that people that go bankrupt, um, it's not really evident that they're going bankrupt. People that go bankrupt don't have 30 days, 60-day, 90-day late payments. They basically keep borrowing Rob Paul to pay Peter
Mhm.
until they get to a point where, oh crap, my credit card bill went from $50 a month minimum payment to $300 a month minimum payment. And then they have 4 or 5 credit cards, and then it's just everything snowballs, right? So I think thankfully, a lot of Canadians did get were a little frugal for Christmas last year because they were uncertain. But then there's also a big chunk of the population that kind of just went as business as usual, and didn't realize, oh, now groceries are going to cost more, and gas is going up, and this, everything's going up, right? Um, Also, too, like, remember when construction material went like AWOL, essentially?
Yeah.
Yeah, trying to build a deck. It's like, okay, I set aside $30,000-$40,000 for a deck, and then the contractor comes back. It's like, yeah, that quote that we gave you, well, you're gonna have to double that or triple that. This is gonna be the real cost,
Mhm.
and a lot of people got blindsided from it, right?
For sure. And we were in this bubble of during the pandemic of being able to spend money. There's all this extra money around, so people are spending, and then all of a sudden we had to hit the brakes just
Mhm.
as an average person, and all of a sudden, it's time to not spend.
Yeah.
This is a year to not be, buying buying a new truck and
No.
these kind of things, you know. So it's a tough shift for a lot of people.
Yeah. Yeah. People would just have to separate their needs and wants.
Yeah.
What do you absolutely need? Like during like the depression and stuff, instead of like eating, you know, eating like, steak and lobster, they were making soups. They make a soup, lasts you for a week.
Mm-hmm.
You get to have so many meals. Obviously, you don't want to eat the same soup all week long, but it was just a cheap way to feeding the family and kind of making every dollar count, right? So
And this is
we
the time for that. I mean, that might seem a little extreme, but if you can get yourself to a point now where you're living below your means, there's going to be opportunity out there over the next couple of years to buy assets if you can, get your head around that concept and trying to set yourself up for later. They say, more millionaires are made during recessions than any other time, and
absolutely,
it's true, but you have to be, you know, willing to do what it takes and be prepared.
yeah, absolutely, yeah.
So, look, I don't want to take too much of your time here, but I
No
appreciate
worries.
I appreciate the insight and the value. Obviously you're providing value to your clients and not getting them to do anything that is going to put them in a bad spot. So that's always great to see.
Mm-hmm.
Before we go, is there
I
anything
do, yeah, I do want to mention something. So, and especially for the buyers out there, people who are looking to buy or sell their house and looking to get a new mortgage or whatever. Um, definite, we've been seeing an uptick of the fixed rates going up. The bond market kind of has been doing a roller coaster since November, up, down, up, down, up, down. We're at a point where it's getting past the peak of its highest point in the last 4 months. So, right now, if you're buying a house and an insured purchase, 4.79 is a great rate. If you can lock in something in 4.79, 4.89, have a 120-day rate hold. That way you're prepared for the spring market. If rates do fall, by the time you're ready to buy a house, you don't have to go with the pre-approval that you have with a rate locked in. You can actually pick and choose at that time what you want to do. But absolutely, if you are thinking of getting into the market or thinking of selling, definitely get your rate locked in, because again, we don't know what's going to happen in the next like 3-4 months.
Absolutely. Yes. No,
Yeah.
thank you for sharing that, because I
Yeah.
often say that too. And I don't think it can be said enough. People hear it, but I don't think that they necessarily take action. And that should be the first step. I always say the first step is go speak to a mortgage broker,
Yeah,
get that lined
absolutely.
up. So you know what you're doing when you go out and look, and you're not going to get disappointed. You're not going to be looking at $800,000 homes, find out you can only get qualified for 650. Then those 650
Yeah.
homes don't quite look as good as the $800,000 ones. So
That's exactly right. Yeah,
yeah. So
absolutely.
thank you for sharing that. Where can people find you?
Outsmart the banks, or my website is, well, outsmartthebanks.ca, or bomb.ca, bomb.ca, stands for Best Ontario Mortgage Broker.
Awesome. Nice. That's great. Appreciate it, man. Thank you so much. And yeah, we'll stay in touch. And
Sounds good, Morgan. Keep up the
let's
good
hope
work.
that things kind of just stay a little like this and don't go too crazy either way.
For sure. Absolutely.
All right, man. Talk
Take
soon.
care, brother.
Bye.
Cheers.
Oh, no. How do I stop recording? There we go.